1MDB has filed a court order seeking to expedite the sale of super yacht Equanimity, said to belong to fugitive low-tech Joe. 1MDB is two subsidiaries, 1MDB Energy and 1MDB Global Investment, and the government named the owner of the ship, Equanimity of Cayman Islands, as the defendant in the suit. According to Bernama, the four plaintiffs are asking for the sale of the ship, bunkers, fuel, lubricants and other consumables on board to be conducted via public tender or private treaty by the Admiralty Court Sheriff. The firms want any bids or offers to be paid to the sheriff in US dollars, euros or ringgit. The firm said that the proceeds should be paid into court and placed in a bank account approved by the Attorney General. The firms also said that the ship was physically deteriorating as it has been exposed to the elements, and it was in the best interest of all parties that it was sold as soon as possible. It noted that the value of the vessel has already depreciated and the continuing cost of maintaining her would only reduce the amount recovered. Jolo had earlier claimed through his lawyers that bringing the Equanimity to Malaysia was an illegal act by a vindictive government. It was a strong second quarter FY18 for SP Setia as net profit spiked 77% to 442.7 million ringgit thanks to higher secured sales. However, the company also registered a 343.8 million ringgit one-off provisional fair value gain for the period. Revenue rose 7% to 926 million from 866.4 million ringgit. The group announced an interim dividend of 4 cents per share, consistent with previous years. SP Setia said that it has secured sales of 2.1 billion ringgit for the first half of FY18, where local projects contributed 1.41 billion ringgit, while international projects made up the remaining 705.3 million ringgit. According to President and CEO Datuk Khor Chap Jen, internationally Australia continues to lead and said that demand still exists for properties in the right locations. For the second half of 2018, the company said that the focus would be on the local market with emphasis on mid-range landed properties in the Klang Valley. It said that given the planned pipeline of launches, the group remains positive of achieving its sales target of 5 billion ringgit for the current financial year. Independent power producer Malakoff Corp saw an almost 50% drop in its second quarter FY18 net profit to 52.6 million ringgit due to lower contribution from its assets. The primary cause was Sagari Energy Ventures, which saw a reduction in tariff under the extended power purchase agreement. Lower fuel margins at Tanjung Bin's coal-fired plants also contributed to the softer earnings. However, top line saw a more than 12% improvement to 1.94 billion ringgit, and the group declared an interim dividend of 2.1 cents per share. Moving forward, Malakoff remains positive on its overall prospects for 2018, backed by strong electricity demand from industrial and domestic sectors. The group also said that it would continue to focus on improving the performance and reliability of its assets to minimize disruption. Malakoff added that it also expects its overseas investments to yield positive returns in the coming quarters. Manufacturers on the whole welcome the proposal for a higher minimum wage if the government sticks to its promise to shoulder 50% of the increase. Federation of Manufacturers Malaysia President Datuk Seo Tian Lai says this was the Pakatan Harapan government's promise and he believes they should honour it. In particular, So was referring to Pakatan's pledge to normalise wages between business sectors and geographical locations and to gradually increase it to 1,500 ringgit. If the government sticks to its word, 84% of respondents in the manufacturing community agree that the minimum wage should gradually be raised. The FMM has also requested the federal government share a clear action plan on how it intends to dole out the GST refunds to the affected companies. FMM had found that at least 100 of its members were affected by 245 million ringgit worth of delayed GST refunds. Hong Leong Bank has become the first bank outside China and Hong Kong to partner Tencent's WeChat wallet, allowing its customers to use WeChat Pay as an alternative payment option, reports Bernama. HLB Group MD and CEO Dominic Fuda said that this would enable merchants and individuals to conduct WeChat transactions in ringgit. Fuda also said that the partnership allows Chinese tourists to pay using their WeChat accounts in Malaysia. He explained that HLB is not only looking to expand the payment ecosystem to Malaysian merchants, but also to cater to the tourist market. Currently, WeChat Pay has more than 900 million active monthly users worldwide. HLB customers will now be able to pay for their transactions in ringgit using WeChat Pay at WeChat's own shops and platforms, as well as third-party services such as Garena, music streaming site Jukes, and local telco prepaid top-ups.